Hey guys, welcome back to my YouTube channel. It's a brand new day. Still proceeding with the previous backtest that we're doing of the trim the hedge strategy. In the previous video, at the very end, towards the end, I mentioned that it's very likely that the reason why we keep getting hedged is due to the fact that we are essentially using a very tiny stop loss. So I got curious and decided to explore that a bit and checked out the ATR, the average true range of this pair, specifically for the 1 hour time frame. If you check the daily, I noticed that the ATR stands at about between 60 to 70 pips, at times 40. And if I check the hourly time frame, as you can see, we have 30 pips and it ranges. So I was curious, and I guess we could try for this session to change the parameters, our parameters to essentially use 50 pips instead. So we change our profit level to 100 pips, and then our stop loss level, we move it to 200 pips. So this is risk to reward sell. Oh, okay, let's just see if we could use 1000, and then here we use 500. Then we apply. For this one, we'll just remove it, and then I just want us to explore and see what will happen in this case. If you can remember, the last time we were supposed to be balancing. Let me just open this table for a bit so that we can to allow the calculator to see the table, because it essentially reads the table live. So it's saying that right now we are fully balanced at 0.46, but we could add, bearing in mind our capacity was at 1 lot. If these words are coming to you as a surprise, or rather you're not aware of what capacity or balancing means, I definitely recommend watching the first video in the playlist that I'll be adding this video to. So I realize that it's easier if I just create a playlist of the backtest related to the same. So for now, we'll just be proceeding, and I guess we could say, since the market is breaking this level, we could add a buy trade. This is 0.46, so if we have a buy trade of 0.54, we could have essentially fully balanced this trade. So if we have 0.54 and we buy immediately, just a market order buy, should be okay. And then we hedge at 50 pips away with 0.54. 0.54, if I'm not wrong. Yeah, it's supposed to be 0.54. Nice. So we remove the stop loss and take profit, and then we place the order. So we are hedging at this distance away. Let's just see what will happen next. So the market is moving nicely, if I might add. At this point, let's see if we can just peak above the take profit level. If you're using a robot of sorts or a script, it should have been able to just take profit at this point. But since we are backtesting and we're doing this manually, let's see if we can get a bit. Doesn't seem like I can. Nice. I wanted it to just above, kind of mimic a real market scenario. Since you'd need enough time to come in, trim the trades, which requires of course a bit of calculation, and then you clear out the opposing side. So that can take time. That's why I'm leaving it to ensure, essentially ensuring that the market actually peaks above before we actually try anything else. Otherwise, bearing in mind the details that we have here, it seems we are supposed to be using 395.12 of 0.54, and you are closing the farthest sell trade, which is this one, the one that is farthest from the current price. So it's the opposing order, but the farthest one. So we have negative 573.01, and our trade at that point, let me just check, 573.01, it is at 0.25, so 0.25, and then I tend to just keep a quarter of the profit. This isn't a rule of thumb that you can follow. I'm just maintaining what I've been doing since the backtest started. So 0.12. It's saying essentially that I'm keeping a total of 120. I know it has increased from 98, but it's just using 275 to close out a bit of this trade. If you go to 0.13, you'd notice that it will eat a chunk of your keep profit. So let's just copy that. I cancel this sell stop. I close this buy trade since we are taking profit, and for this trade I need to partially close 0.12, and we've essentially reduced our hedge. So let me load this up again to see our difference. So we have buys at 0.46 and we have sells at 0.34. Our delta is at 0.12. So let's see. Bearing in mind, I'm just trying to figure out what I'll be doing now. Bearing in mind we are technically at almost the midpoint. I could add a buy and then hedge it, but then based on what I'm seeing and after this move, I'm expecting at least a retracement from the market. So in that case, I guess I'll be using the 0.12 that we now have available on the sell side to add a sell trade that will maybe, or rather I'm expecting or rather anticipating that it could try to retrace and it could take some profit before then again buying. Otherwise that could fail, but I'm just setting an expectation here. So in this case, if we take an immediate sell trade, you can see that if the market ends up moving 50 pips higher before actually retracing or dropping for the 100 pips, we'd be unlucky, but of course we'll be equally hedged, but otherwise we should be okay. You also have the alternative to set a pending sell stop on the lower side, or rather at any point below, and as the market is heading higher, you're trailing that order higher. Essentially, you can play around with the strategy to fit your needs based on the specific requirements that you have. In this specific case, since I'm not sure as to whether or not the retracement is coming, and the buy side is of course the direction that has the higher volume, I'll be waiting. But in the meantime, I'll be setting a sell stop 50 pips away from the market. Of course, that seems like pretty overkill since it seems pretty far, but it's what I want to do at the moment. So it will allow the market to push higher without being encumbered by my trade. Of course, I could decide to just place the order below each subsequent bar, but bearing in mind we've been trailing based on the stop loss size, I'll just use it for the time being. So we're supposed to be setting a sell trade of 0.12, if you can remember. And then I just remove the stop loss and take profit, and then I place the order at that point. So as the market will be heading higher or lower, I'll be trailing it. So as you can see, the market went higher. I'm just moving this trade to the highest point and then trailing. if it gives us a new high, I'll just be trailing that. I'm basically mimicking a trailing bot, which is of course expected to be very precise with the pricing, and we'll be using the last bid price at the top. Seems like we might be triggered. Nice, we're triggered. So once you're triggered, I don't see the point of moving slowly unless we're pretty close to our take profit level. Nice, so we're now pretty close to our take profit level. Once again, if you had a bot, it's likely that you could have gotten the high price there. So the market will have trailed a bit, and it's likely you could have already taken profit. So that's kind of the advantage of having something that actually does this for you automatically. So this trade was taken off of the premise that we are anticipating a retracement, and we did get it, but it seems the market might be heading back pretty soon. Yeah, as you can see, the market seems like it would like to proceed the upside. Yeah, we've broken above, and this of course gives us the chance to essentially put back our money back in the trade. So we should now have a total of 0.46 if I'm not wrong in play. Let's just confirm that. Yeah, 0.46. So we could we have the opportunity to set a buy. We could buy it immediately or take some time, but you could set a buy trade of 0.54 and essentially target the highs. So if you place a buy trade like this, of course you'd have to hedge it, but yeah, it could work. Let's see. And then you'd have to equally hedge it in the opposite direction. So we say 0.54, 54, and then oh, I've set a buy stop. I've made a slight mistake. It's supposed to be an immediate buy, and then I use that same price as a basis for my sell stop, 0.54, and then you just move the stop loss and the take profit, and now we are ready to move forward. So yeah, let's wait and see. So yeah, we proceed. So we've just picked up the sell trade. So of course now we are fully hedged at one lot. If you'd like to verify that, I'll just open the table, clear, and then we get buy lots. We are fully hedged at one lot. So now we're waiting for either trade to get in the money. Okay, this is likely. Oh damn, I missed that. Okay, let's just wait and see. Just need a good price to some nice movement in the low to the low side. So this one hasn't yet gotten to 100 pips. Let's see. Yeah, it isn't yet exactly at 100. I don't know what you think, guys. I guess I could risk it and see whether we can. Yeah, nice. We've gotten two trades with 100 pips of profit, and now we can use those two trades to trim out this trade, the buy trade, which is now the farthest opposite trade. So let's do that. We think this one should be able to handle that 0.46. Yeah, nice. It is trimming that trade. Actually, it's trimming quite a large chunk of it, but we haven't yet kept part of our profit, so let's try and keep some. So 122.13, and then here we are keeping, 25.66 times 0.25, which is equivalent to a quarter. Nice, we are good on that front. And then we just watch, we are supposed to be closing 0.16 of the farthest buy trade. So I think I'll start with that, since that's the more complicated point. I just copied the field from above, then I close that position partially. I hope you're watching the equity balance and the P&L, and then we close out these two trades. As you can see, our balance is increasing, equity not so much, it's just playing around. But if you might have noticed something, the moment when we started using a larger stop loss, we are now making more movement, or rather better movement, in as far as dealing with our hedge trades, since we are not getting hedged as often as we were before. So in this case, I was wrong about this breakout, because I had assumed that this was a breakout, took a buy, which failed, and then we were hedged, and we used that hedged position's profits to deal with this loss. I hope we are together and you're still getting what's actually happening. So at the moment, let's actually see. At the moment, we have a delta of 0.5 on the sell side. So you're supposed to be adding a sell trade of 0.5 to balance out the two trades. So bearing in mind it's a sell trade, we'll be setting it as a sell stop from the price where we exited, and then we will trail it if the market heads higher. So if the market does this, remember our sell trade would be about here. If the market starts moving higher, we'll start moving this order back to such a point where we can essentially, when it will be triggered. So if the market retraces and then triggers us, remember we are getting a better price, and then we are also reducing our hedge. So let's do that. So for now, I'll just close this table. Actually, I could also remove the ATR. It's just eating up on our screen real estate. So for now, let's set this order. We want it 50 pips away. It's supposed to be 0.5. So remember, initially we were at one lot fully hedged. Now we are at 0.84 if we do become fully hedged. So we now have a sell stop, it's there, and then we just monitor the market. So let me zoom in so that you guys can see the action. So the market made a tiny move higher, so we'll be trailing our sell a bit higher. I like to do this manually like this so that you can see the actions that need to be done. You don't necessarily need to do this manually. You could do this on a bar by bar basis. So once a bar closes, you could do it then. And actually, when backtesting, that's the easier way to do it. But when you're trading live, I definitely recommend trying to find an auto trailing bot that will actually trail your orders back, and as long as you're making sure that you're getting a better price at the end of the day. So the goal is to get a better price. So if you think about it, if I move my sell trade higher, I'm getting a better sell price. And the moment you do that, you're essentially reducing your hedge, because at the point where you'll be triggered is essentially the gap. This gap is your hedge. So that's what you're trying to reduce. The lesser it is, the less your hedge, or rather the amount you are in at a loss. So let's continue monitoring this. So as you can see, if it were 20 pips, you could have already been triggered, but now we haven't yet been triggered since we are hedging at 50 pips. So a larger stop loss does serve you better. So it was a slight move higher. Of course, at times I'm not precise or exact, but I really hope you forgive me for that. I'm just trying to ensure that we go through a lot of examples in as little time as possible, so that once you're done exploring the trim the hedge strategy, we can explore other approaches to hedging. So I just wanted to give this approach approach its chance, or rather maximum opportunity, to showcase what it can do, so that you guys can understand what it does and whether or not it would be useful for you. Okay, we had a very nice move down, and if you can remember, we were initially hedged at about this point, and now we are hedged higher, so we've essentially saved a bit so far. So trying to get us over the threshold. And remember, if you can remember, we had like a significant zone down here somewhere. It exists somewhere here, where the market, every time it comes lower, it goes back. So I'm just putting that out there so that you can be aware of what might be happening, and if the market essentially fails to get to a take profit, you can also try to understand. Now look at that movement. I really wanted to close this trade, and if I were actually doing it manually, I'm almost 100% sure that you could have gotten this price, since this is a 1 hour candle, if you can remember. So let me use my keyboard instead, since I would be faster at moving the price. I don't really want to hedge, since remember we are at 0.84. I tend to like to add once we are less than half of the capacity. Our capacity is at 1 lot right now. 1 lot, and initially I added, since we were 0.46 lots hedged on both sides, so I added 0.54. Now we are at 0.84. I don't necessarily see the point in adding, since I'm essentially putting more money, yet I haven't yet cleared a chunk of the margin that I have. It's essentially being, the margin that I have is essentially being used by these trades, and I'm not seeing the point in putting it adding more margin into the market, yet I haven't yet dealt with the trades. Of course, there are certain situations where you find yourself, the market essentially, like if you check out these trades, most of them are at the support zone for the market. So in these situations, you might find yourself willing to add more margin. So you could add more capacity to your trades and say maybe you want to move it to 2 lots, and once you are below 1 lot, you stop using 2 lots and you continue using 1 lot. So you could take advantage of some price movements. But for now, we'll just follow the rules and keep it at 1 lot, which is essentially just maintaining good risk management. So let's see, I'm moving it ahead so that I can see it better. So as you can see, every time the market comes around this zone, it just reverses. This could have been a great place to add a buy if I could have had enough capacity. Nice. I don't want to miss this again, so let's see. I don't know if you can get to the low. The market just gets to this point and reverses. For those people who tend to say that support and resistance doesn't work, as I mentioned in a video that I posted some time back, I have found that almost all strategies work. What tends to make a big difference is your risk management. So how you manage your risks. Some strategies work very well if you risk very little, like teeny tiny amounts. So the market started moving. So as you can see, it went off again. So if it comes back again, I think I'll be very willing to just exit out. Damn, it has went away again. Like, it's something that repeats itself like clockwork. Now look at us. We'll get a profit from the buy trade, yet our sell trade hasn't even gotten to that point. And it went almost to, actually at this point it went past 100 pips. At this point it was very much almost, and you could have just used up those profits. So that's on me. That is definitely on me. This one has already gotten to profit and we could use it. Let's just use it at this point. There's no point in not using it, since we were starved for a trim. Anyway, it is supposed to be closing the farthest off sell trade, the 423.41 now. Yeah, now it's working correctly. So you're supposed to be closing 0.09 of this trade, which is also at not at a very good position, bearing in mind it's slightly off of this significant support. So we close that a bit. As you can see, balance is increasing, equity not so much. And then let's see our hedges. We are sitting at a 0.45 delta, but on the buy side, so we need to add a buy of 0.45. Nice. And then we just trail it back as the market allows us. So I'm just zooming in so that you can see the action. So market moved up until that point, so we trail it back. We are saving essentially a few pips throughout. Nice. Once again, another move below, saving us a bit of money. Okay, this is where I think Forex Tester gets to a point where I start getting concerned. You want to tell me that the spreads got to a point where, I know this is based on historical data, but the spreads were more than this is about 15 pips. That's weird. I know it's about midnight. Okay. Anyway, let's trail this again. Okay, let me just give it a push, since the market doesn't seem to want to move as fast as I would like. Of course, if we get triggered a bit due to me moving faster, hope you'll forgive me. Yeah, nice. That was just exact. So we are good on that front, and now we should be hedged. To confirm that we are hedged. 0.75, still not below 0.5, so I can't really add anything. But this is something I'll say, if the market gets to this point, I'll just be trimming down this trade. It's sitting on a lot of profit, or rather it's contributing significantly to, oh damn, we are already past this. So we could decide to close out everything, but for now I think I'll just be closing out this one. So that's nice. I think we could be able to close out the position at the bottom. So 437.27, we are taking a quarter of that and putting it in our pockets. So yeah, 109. This trade is we're supposed to close the whole of it. And for the next one, the 410 trade, we're supposed to be closing 0.06, but then we have a problem, bearing in mind this trade is also being counted, yet it hasn't yet gotten to a profit which I'd like to keep. So we're only closing 0.03 of that one, since I essentially don't want to close it. So we're only closing this buy trade. Oh, that's why I actually told it that I'm keeping the whole amount, so that it doesn't include it in the trimming. So for now we're just using this trade. So let's 0.03. So we are closing the whole of this trade. For this one, we are partially closing it at 0.03, and then ultimately we are taking profit on that trade. We've actually significantly reduced we've made some good effort in trimming down the trades that are at a less than ideal position. So let's check on our balances. We have a delta of 0.38 on the buy side, so we're supposed to be setting a buy stop 0.38. So 0.38, and then after that, remember we have to keep monitoring this trade so that if and when it gets to profit, which is odd that if and when it gets to profit, we are supposed to be closing it, using those profits to trim down the opposing position, the sell trades. But otherwise, let's just proceed and see whether we can move this to a better position. So at that point, we trail it back. Nice, we are triggered, and we are also above this trade, so you can use up the profits from this to close out a trade on the opposite direction. So let's just do this, and for this one we'll just keep the whole of it since I don't want to close it. But for this one we are taking some profit off the table, $55, and we're essentially closing 0.03 of the 0.07 trade, which I believe is this trade. Let's see, yeah, 312, yeah, it's the one. So we partially close that amount, and then this one we close the whole of it, and yes, we are making progress. So right now I know we are supposed to be having a delta, or rather a difference between the buy and sell side, so 0.27. Oh, by the way guys, you could still, let me change this one so that you can see. You don't have to click on all, it's just a force of habit. You can just click on here and it should load automatically. So 0.27, you don't need to clear fast for you to get the summary. So 0.27, we need to set a buy stop at 0.27, and we place it. I close down this point so that you can better trail the market. Let me move this one here, since that one is for keeping track of the profit, while this one is the one we are trailing. So let me just use this new price. Since the market went lower, we are trailing back, which is nice, of course, as always, as I mentioned. The market is retracing strongly, which isn't bad for us. It is helping us save a bit and reduce our hedge. Nice. We seem like we'll actually get a better price than the buy that we've just been triggered at. So we continue. Of course, I'm zooming in so that you guys can see better. I actually hope that you're enjoying the video. If you are, don't forget to like, share, and subscribe, of course, as always, and leave down your comments below for your opinions on whether or not this format is great or whether I should switch it up a bit. So a very tiny movement below. Another movement. So as you can see, we're just getting a better and better buy price. If you think about if you're thinking about getting better prices, if you think of it in a way that's the way I think it makes the most sense, because you're just thinking of it as you trailing your order until such a time you get a very nice entry point and a very good price for your trade. So if you were watching our PNL, you could have noticed by the time we were exiting, we had a PNL of about 2036. But right now, we've just gotten like $130 just from trailing this order back. Because as you're trailing it back, you're essentially squeezing the hedge. So you're reducing the overall loss, because your hedge is basically the difference between your buy and your sell, your closest buy and your closest sell. So if you squeeze that size, you essentially end up with more PNL in your pocket, because you're essentially squeezing your loss. Once again, if you could have been using 20 pips, this could have been triggered a long time ago, I think. Yes, about around here, this candle, because this candle played a bit. But since it's 50 pips, we are getting a better and better price. And this is why I was recommending, if you're trading using this strategy, try to keep your lot sizes small, and then also make your stop losses larger, so that it gives the market a lot of breathing room. And you only tend to be triggered when the market is either at the extremes or has made a large movement. So essentially, you would essentially be triggered more often if the market has volatility, which is actually what you want, since you're essentially hoping for the market to trigger you in and move on ahead to your take profit, essentially resulting in a clean trade, as opposed to being whipsawed throughout as the market is moving back and from to and back to from a specific point, especially when it's ranging. So as you can see, PNL is increasing, bearing in mind we keep trailing the order down. At the point where this will be triggered, you'll notice that it will stop moving. So you could watch the PNL. That's essentially the magic of hedging. So at this level, I would at the very least expect the market to do something, maybe to start bouncing. You'll see. And if we get that retracement, it will be good for us, since good, nice, we are triggered. Now watch this. It's not really moving that much. It has like a difference of, and that difference is actually brought about by the spreads, not the market moving itself. If there couldn't have been any spread, this amount would have been static, like because you've just put a pause on your loss. But anyway, I guess let's move this along a bit faster. Let's see if it will peak above that level. Some of you might ask, why am I not closing some of these trades even when they have a small bit of profit? The point is essentially you never know what the market will do next. Since you don't know, why would you take, let's say, $100 in profit, yet it could go to 100 pips? Like, you just have to wait and see. And this strategy essentially allows you to build that patience. You don't have any other option apart from just waiting. If you wait, you can essentially see what the market will do, and it basically allows you to figure out to get a feel of the market, if I could use that phrasing. So let's keep a quarter of this as always. And then we check out, it's saying we have a 169 trade, this one, and it's saying that we need to close 0.03 of it. Actually close it. I'm not even sure how much is remaining on that 169. Oh, we'll actually have only 0.1 lots. I think the next stream should be able to close this out without much of an issue. Yeah, and then next we'll be dealing with this trade if the market actually continues pushing higher, and then this one. So let's also take our profit. Don't forget to take your profit. And then let's see the delta. The delta is at 0.24. So we need to set a new trade. This one is, I'm using it to keep track of this trade, but we need now a 0.24 trade. Is it 0.24? 0.24. Buy stop of 0.24. And you place it. And then, as you know, the next thing is to just trail it. So we trail the order. So if the market is actually at an extreme, it will work in our favor again, since it will start moving lower, and then we can move our order back, which is good for us, of course. So as you can see, larger stop losses tend to work in your favor, and now we are triggered. Let's see if we can get a trade to trim within the next few minutes. Nice. Oh, I forgot about this. So actually we have two trades to trim. We can trim all our buys, and let's see, it's a happy coincidence. Keeping 43 of that, and on this one 316.61. Let's keep this, just want to be precise. So we are closing out the tiny trade at the end, and then 0.06 of this one. Yeah, that one. So let's copy that, partially close that one, and then here close out that, and then here we're closing out all of our buy trades, and you can get rid of this one, since now we'll have only a single trade. As you can see, we've been working through our loss. Our balance is increasing, equity is fairly the same, P&L also fairly the same. So bearing in mind the change that I made, which is increasing the stop loss, something has happened, something actually great has happened, in that we are dealing with the loss way faster, since number one, 100 pips has way more profit than 40. So you have more money to play around with. So your balance is increasing faster since you're keeping more money and you're applying more profit to your stop loss. Of course, it takes slightly longer, since for the market to move 100 pips, it takes longer than 40 pips. But the advantage of the 50 pip stop loss is you are essentially getting hedged less often, since you are not triggered by mere whipsaws of the market. Like imagine being triggered here and then the market heads lower. Something that happened in the last sell trade here, if you watch the last video. So this is something I'd recommend, of course, if you're using trim the hedge strategy. But for now, I'll be stopping it at this point. And yeah, see you in the next video. I really hope you enjoyed this example. And let me hear your comments in the comment section below. And if you have any queries, suggestions, or opinions regarding this matter, I'd definitely like to hear them. And see you in the next video. Bye bye.